Right now, as I'm sure you realize from that short video, is a very exciting time to get involved in the agriculture industry. I'm going to spend the next few minutes talking about farmland investments in general and how we at Network Opportunity are offering a new and unique way to invest in farm operations which offers investors a steady income, growth on capital, and superior security features. But let's begin by talking a little bit about why farmland investments have been gaining popularity and what options are available out there for Canadian investors at the moment. So why invest in farmlands? The most obvious reason is that as the world's population continues to rise, food will be in constant increase in demand, while the farmland that this food is grown on will be decreasing in supply in order to build houses for this new population. This rising demand and decrease in supply has been driving farmland values upward and is expected to continue this way. There are also many other less obvious reasons that farmlands have been and will continue to be a good investment, such as their proven ability to hedge inflation and that they provide a stable income from farm operations. Canadian farmlands in particular have been gaining a lot of popularity recently and have been offering very attractive returns for investors. Canadian farmlands are some of the best in the world, have a vast supply of freshwater sources for irrigation, and global warming, although disastrous in many parts of the world, has so far benefited Canadian agriculture. These are just some of the reasons that Canada is doing so well. And you can see this by taking a look at Farm Credit Canada's report. Taking the last 7 years into consideration, you can see that on average, farmlands across Canada have increased in value by more than 10% per year. Because investing in farmlands is a relatively new market in Canada, there aren't many options available. So far in Canada, the farmland investment companies that exist offer it as a limited partnership. They buy up a bunch of farmlands across the country and lease the land out to farmers. The investors then receive an annual payment based on the farmers' lease payments, as well as a share of the increase in the value of the property. The minimum investment for these types of funds is usually quite high, upwards of $100,000, and to invest in one of these funds, one of the requirements is that you have to be an accredited investor, meaning that you need to have net financial assets of at least $1 million excluding your principal residence. Unfortunately, most investors in Canada do not fall into this category, and as a result, have not had the opportunity to invest in this amazing asset. That's where we come in. At Network Opportunity, we have teamed up with Lexon International, who offers the opportunity to invest in the Canadian farmlands in a unique way that holds no minimum requirements as opposed to the LPs that I just discussed. We work with successful farming corporations who wish to grow their business and help them acquire more land or infrastructure to do so. The way we do this is by using a syndicated mortgage on the property. Investors, whether they are accredited or not, have the opportunity to invest registered and non-registered funds into a syndicated mortgage that will be used by the farmer to purchase more productive land. Investors will then earn an expected annual return of 7%, which can be broken down into two parts. First, the farmer will pay an annual interest payment of 3% per year, and the second portion will be a deferred lender's fee paid at the end of the project, which will be equal to 40% of the increase in farmland values across Canada during the term of the mortgage. If you take the past 7 years as an example, this would have given us a deferred lender's fee of 4.14% compounded. Not bad for an investment with so many security features. As an added sense of security, we only work with farmers that have their crop yields pre-contracted and insured to ensure that our investors receive their interest payments in a timely manner. For those of you who don't know what a syndicated mortgage is, it is when a group of investors invest in a real estate project and the investment is secured by a mortgage on the property, allowing each investor to hold a portion of that mortgage proportional to their investment amount. Therefore, if the farmer defaults on their interest payments, a power of sale will be executed and the investors will receive their principal plus the deferred lender's fees to that date. Syndicated mortgages gain popularity as real estate development investments, where the mortgage is used by the developer to pay for soft costs of the project such as architectural designs, permits, rezoning of the property, marketing, and of course an interest reserve to ensure that the investors are paid their annual return. As you can see in this case, there are a lot of areas where you are exposed to risk, and the interest paid to the investors is not being generated from an income-producing corporation. It is actually coming from an interest reserve funded by the investors themselves. In the case of our farmland investments, the money is going to pay for one of two things, either more land or more infrastructure for the farming operation. The annual interest is then paid from the farmer's crop revenue, which, as I mentioned earlier, is pre-sold and insured, making this a very secure investment when compared to the real estate development projects and the limited partnerships that I mentioned earlier. Right now is the time to get involved in this booming asset. To learn more about our secure and affordable farmland investments and how you can earn a great compensation on your referrals with the opportunity to participate in the project's profits, please contact us today.